Hey Jared, how you doing? Liking the new setup?
Pretty good. Now that I got my studio set up, this is the new studio.
Yeah, it looks good. Let's dive into it. Let's get into this. So I did a poll on gold on the Jared Dillian Money community, and after polling how much gold people own in the app, someone wrote, "I'm 90% I'm 90% crypto and 10% cash." So we'll get to gold in a little bit, but how much does this raise your blood pressure? Hearing something like
Not
this.
I don't know that it. I mean, I've heard everything at this point. I don't know that it really raises my blood pressure. 90% crypto.
He might
I
have been
mean,
trolling.
yeah, I'm sure there's an element of that. I mean, I know people that are in 90% crypto, and I don't. I just look. It's personal risk tolerances. I don't have the risk tolerance for that. If I have something that moves 3% in a day, it kind of freaks me out. And people own stuff that moves 15% in a day and they're fine with it. Um, yeah, I don't know.
All right, let's get into the market headlines this week. So, first one is the Chicago Business Activity Index weakens to lowest level in 4 years. So, the Chicago Business Barometer, also known as the Chicago PMI, fell to 35.4 in May from 37.9 in April. It is the lowest level since the pandemic in May 2020. Next up, we've got GameStop stock soars after Roaring Kitty reveals $175 million bet on the retailer. So GameStop stock surged on Monday after user Deep Effing Value on Reddit, an account believed to be tied to individual investor Keith Gill, who ignited the meme stock rally back in 2021, posted a screenshot on Reddit last Sunday that purported to show that they paid nearly $175 million building a position in the video game retailer. Next up, we've got after trial, investors weigh Trump 2.0 factor as election looms. So Donald Trump last week, as everyone I'm sure knows, became the first former president convicted of a felony, but Wall Street believes he still has a solid chance of winning the November election and is gaming out how a second term for the Republican candidate could impact markets. And last but not least, gold firms on Fed rate cut hopes. Investors await more U.S. data, so gold prices, last I looked, had edged a little bit higher today on Monday, as we're recording, as signs of cooling U.S. inflation lifted hopes for interest rate cuts from the Fed this year, while traders awaited a slew of U.S. economic data due this week. So, any thoughts on those headlines?
Well, we'll talk about the Roaring Kitty one first. That guy's going to jail.
I saw you tweeted that. Apparently,
Yeah.
Chris Riley over at Risk Hedge hit me up today and was like, Jared's gone viral on Twitter. You got to look at this. And I'm like, oh, of course we're talking about Roaring Kitty today.
I mean, it's just blatant market manipulation, Matt Levine wrote a piece today, and Matt Levine did not get into the possibility of him going to jail. And I think a lot of people think that he's immune from that because he's not communicating with words, he's communicating with memes. And if he were sitting in the courtroom and if he were on the stand, somebody would say, well, what do you mean by this Uno card meme? And he'd be like, I don't know, I just put it up there. And so like it's sort of a defense of plausible deniability. But I think if you're the SEC and you're looking at this and you have this person who has engineered the biggest pump and dump scheme of any stock ever, and is enriching himself to the tune of nine figures, like you can't let this go on. Like it's market manipulation. In the commodities world, like in the futures world, like people look at this type of stuff very seriously, and the SEC has been more laissez-faire on this. But he's gotten too big for them to ignore. So,
What about any thoughts on Trump? It's kind of the elephant in the room lately.
well, I mean, if you look at the predicted betting odds, it's roughly 50-50 that he's going to become president. Um, I spent some time looking at the polls last week. I went to 538 and I looked at the polls state by state, and he is ahead in pretty much all the swing states except for Minnesota and maybe Wisconsin. But he's ahead in Ohio. He's ahead in Florida. He's ahead in all the close states. But somehow the betting odds have him at about 50-50.
All right, let's get into kind of the main topics here this week. I want to do a little bit of a rundown of your services. So let's start with the free content, which is the Jared Dillian letter. And then we have some free course offerings, including How Do I Start Investing and Mastering Your Personal Finances, which you can get in the Jared Dillian Money community now. And then we will move into premium services, including Daily Dirt Nap, JDSP, Street Freak, paid courses, the Awesome Portfolio. Can you break down where like an absolute beginner would start and how the progression of their investment journey might go? And then for more seasoned investors, what are some of the key differences between Dirt Nap, JDSP, Street Freak, and how would you kind of recommend pairing those services based on somebody's risk tolerance?
Yeah, I mean, I would say, in terms of risk tolerance, JDSP, Jared Dillion's strategic portfolio is suitable for people with a low risk tolerance. Like, the way that portfolio is constructed is that it doesn't really move. It's extremely low volatility and it just kind of grows over time. It's also a good intro to a premium service because, in addition to the portfolio, you're getting my thoughts on a monthly basis, and there is a narrative, and you get to read some of the thinking behind the portfolio. So that's a good place for people to start. Street Freak and Daily Dirt Nap. Street Freak is an aggressive trading service. It's for people who like to trade stocks. And there is a model portfolio, and we do keep track of the performance. And the performance has been great. Beating the S&P 500 this year, which in the context of a year where you have the Magnificent Seven, which is basically dominating the returns of the index, that's a huge accomplishment. And it's also been achieved with about 30 or 40% shorts in the portfolio. So that's, Street Freak is great. Daily Dirt Nap is for people who are sort of market junkies and they want to read about the markets on a daily basis. There is no model portfolio. Well, there is a portfolio, but I don't keep track of returns. And that is the best thing I can say about the Daily Dirt Nap is that it's immersive. Like you're getting 3 pages a day every day, and it covers absolutely everything. So.
Right. Yeah, that comes out every day. And it's not like a lot of other services that you see that come out every day that are just like these kind of bite size, like morning brew type deals. So, like you said, it's a full 3 pages and single space. I don't know what the word count is on that, but it's a lot.
It's about 1,500.
Yeah. So, moving on to the next topic, high conviction ideas. What do you got on your radar right now? Gold, do you want to maybe tease a little of the private equity idea without going too far into it? Because we've got some stuff in the works on that.
Yeah. I mean, private equity is a bubble. That's my opinion. I think it's one of the biggest bubbles of all time. I don't know what's going to happen when it pops. Basically, the funny thing about private equity is, or just like the whole philosophy behind it in general, it's considered to be an advantage to be a private company these days. There's benefits to being private and there's benefits to being public. The primary benefit to being public is that your stock is liquid and you can sell it at any time. But the private equity people actually believe that to be a negative, and they think that you should hold your investment long term for 10 years or more. And so the thing that makes private equity really attractive is that you have these returns, which are very good, but in the context of basically zero volatility because there's no mark to market. A good friend of mine years ago said to me something very philosophical. He said, trades with high Sharpe ratios tend to attract sponsorship. It's not really the returns of private equity that's making it so popular. It's the returns in the context of zero volatility. And that's Sharpe ratio, because in the denominator you have volatility. So it's a strategy that is performed exceptionally well. It should not perform as well in a high interest rate environment. It should not perform as well in an environment where valuations of portfolio companies have increased dramatically. So those are my thoughts right now.
Anything on gold you want to touch on?
Not really. I mean, it's still consolidating around the highs. It is up a little bit today, but it's kind of run into some congestion around 2300, 2400.
Yeah.
So I think it just takes some patience. I hate to say anything with certainty, but I kind of I have a hard time believing it's not going to be significantly higher around the election.
All right, let's transition into the mailbag. We've got some questions from subscribers, and the first one is regarding JDSP. And while we cannot provide individualized advice, someone wrote in wondering, while copying down your portfolio from the May 24 letter, I wind up with only 70% of funds committed. What are you recommending for the other 30%? And then another person wrote in with a follow up. Should we keep it in cash or a money market earning 5%?
Well, honestly, the 30% is pretty close to my recommended 20% cash position. I don't think a 30% cash position is outrageous. I don't think this person should necessarily run out and put the other 30% to work in the stock market, um, especially considering the fact that you are getting 5% interest in a money market fund. So, really, there's nobody should be in a hurry to deploy cash, especially in an environment like this where valuations are really high. And, the whole idea of cash is that it's an option to buy something cheaper in the future. So maybe just hold on to that other 30%. And if we get a bear market of 20% or so in the stock market, then put it to work.
Yeah, for sure. All right, when to enter a new trade. So this is from a news subscriber. Are we supposed to buy or short the stocks when mentioned or wait until Jared recommends it to new subs? So for context, based on the tickers this person provided, he's referring to Street Freak, but can you clarify the differences between official recommendations and services like Street Freak and JDSP and the ideas you write about in DirtNap? You kind of touched on it. You sort of have a portfolio in DirtNap, but you don't really keep track of returns.
Yeah, I mean, there's, in the Dirt Nap, I kind of, I spitball stuff, I'll say, well, this is interesting. Like, I'm actually doing that with tomorrow. I can't talk about it, but there's there's an ETF that I'm talking about. Like, oh, this might be a good idea, but it doesn't really pass the conviction threshold to put it in the portfolio. But still, it's an idea, and you're free to trade on it. So that's kind of the way I look at it.
Reducing risk. So let's say someone follows JDSP, but has some separate holdings, some of which are up a pretty good amount. What are your thoughts on stocks on the riskier side that may have more room to run? Is this ultimately going to cause someone more stress to write out their investments versus following something more conservative like JDSP? And the big one that he wants to know is, what are your thoughts for those who stress about paying taxes on gains?
I don't stress at all about paying taxes on capital gains. I really don't. I mean, taxes are basically a signal that you did something right. That's the reward you get for being a good trader. A lot of people hate paying taxes. They buy a stock, it goes up 100%. They don't want to pay taxes. And then the stock goes down 100%, it goes to zero, and they have losses, but at least they don't have to pay taxes. The logic is totally screwed up. Like, what would you rather pay taxes or would you rather have losses? So, like that, I see people do this all the time. Just sell the stock, pay the taxes, move on to the next trade. You know,
Yep, I agree. All right, let's transition here to the week ahead. So we've got payrolls for May on Friday, June 7, CPI next Wednesday, and an upcoming Fed meeting next week on the 11th and 12th. Any thoughts on that?
I am going to be in New York on Friday for payrolls. Um, Payrolls have been a little, claims have ticked up a tiny bit. The last payroll number was a little bit on the weak side. I think people are, let me put it this way. I think the whisper number for payrolls this month is probably a little bit lower than the headline. And I think since people are expecting a bad number, it's going to have to be really bad in order for stocks to go up and gold to go up and bonds to go up. So um, that's my view on payrolls. And the Fed meeting. This is going to be actually a pretty boring Fed meeting. Um, Really, we're just talking about this one potential rate cut in September, and this is June. We have one more meeting, so maybe maybe we get some clues as to September, but none of this really matters. What matters is what happens to monetary policy after the election. and there's going to be a big shift. I'm not really engaging in this dicing mouse turds of like trying to figure out this one rate cut in September. I don't care.
Let me ask you one more thing about Philip Morris. Is there a Zen shortage right now, Jared?
There is. There's a Zen shortage here in Pawleys Island.
There's one in South Florida too. Is there something going on?
I mean, it's demand outstripping supply.
Yeah.
That's what's going on. So people were hoarding them. They were buying 25, 50, 100 cans at a pop. I usually buy 10 at a pop when I go to the gas station. And I had to buy the ONS, the competitor to Zen, which are 8 milligram. I don't like them as much because they're smaller and they kind of float around in your lip. But that's what I've been using until they get Zen stocked up again.
It's crazy.
I mean, basically, I don't remember the name of this guy. There's a guy in the book, Unknown Market Wizards, the Jack Schwager book. And basically what this guy did was he was trading off of TikTok, right? So he would go onto TikTok and he would search for like shortages or running out of supply. And this is kind of a dumb example, but let's say he found on TikTok that you couldn't buy UGG boots or something like that. He would buy the stock. Like he was getting all of his information off TikTok, and he started with like $10,000 and now has $60 million. And he strictly uses TikTok and social media to invest.
Looks like Philip Morris is up a little bit here today.
Yep.
All right. Well, anything else on your radar here in the upcoming week?
Going to New York this week, and then I'm around for a while. My wife is actually going to Europe the week after that, so I'll be in the new house by myself with the cats.
How is the new house? Everything going good?
Yeah, it's good. So this is the new studio. I got some knickknacks up there and lots of books, and the office is over that direction. And yeah,
it's awesome. Congrats on the new house.
Thanks.
All right, so we will be back next week. For everyone watching, make sure to like, subscribe, hit the notification bell, and Jared, I'll talk to you soon.
Thanks, man.